Dismiss. Hello. Boom. There we go. Yeah. All right, today I'm going to be talking about properly protecting your family or your business. And keep in mind, this is just general information. This is general information, general education. If you guys want to know more or learn more, you can always check my bio, click on the link, and get on my calendar or DM Properly Protect. Okay? That would be great. But guys, I'm Jason Murry. Welcome to the live. I've been in the financial services industry for about 17 years and going on 18 years. I was with a captive company for 16 years. 16 years. So yeah, I'm 18 years. Unbelievable. So I was with a captive company for 16 years, and then I've been independent insurance broker for just a little under 2 years. Okay. So what's up, everybody? Welcome to the live. I'm Jason Murry. I've been around the financial industry for 18 years. All right. So we're going to be talking about, just how to properly protect individuals, families, business owners, organizations seeking comprehensive life insurance solutions. And just wanted to give you guys a little bit of education, what I'm learning since I've left my captive company and came over here to be a insurance broker. And I'm learning a lot of new things, a lot of great things that I didn't know about that I wasn't taught in the previous company. It's okay. They had their niche, but my niche has gotten a little bit bigger and a little bit more different. Okay. We're going to talk about the importance of proper protection. Proper protection is life insurance. It is the foundation of your financial house. What we talked about last night was the different kind of insurance. Not all insurance is the same. And your financial house. Okay? Getting that proper foundation in, because without a life insurance policy, it's like building your house on the sand when the rivers come up and the oceans come up and take your house away because you don't have proper financial protection. Okay? So that is the role of life insurance in a general sense when it comes to proper financial planning and a proper financial house. Welcome to the live, everybody. How you doing? I'm Jason Murry. We're talking about life insurance, proper protection for your families, individual business owners, and organizations. Okay. Thank you for the follow. Thank you very much for the follow. Who was that? That was Robert Foley. Thank you very much, Mr. Foley. Appreciate it. So, proper insurance in place. Now, understand this. When I was with the captive company, I thought there was only one insurance product that was proper for anybody and everybody. And then I realized that after a client wasn't going to be covered through our product and through our service, okay, then I was told to tell them that they were uninsurable, which I found out to be false because they came back to me and said, hey, dude, you kind of lied to me. You said I was uninsurable, but I got to turn through somebody else. And I was like, what? When did that happen, right? Which kind of started my journey and moving into being an insurance broker rather than just an insurance agent. And so, anyway, with that said, my ignorance led me to lying to my client, and that's not good. So guys, understand this. Not one insurance product fits everybody's lifestyle. If people can't qualify for term, you got to qualify them with something, especially if they were never taught to invest the difference and they were never taught to invest in the first place. And they lost all that time to invest. They need to be in a product because their family doesn't need to succumb themselves to a GoFundMe account that only pays upwards of $2,500 when it comes to paying off a death benefit. That's just unethical and immoral in my opinion. I at least got to get them something that they can qualify for and cover. So getting the proper protection means that you got to know where you are health-wise, where you are age-wise, where you are financially. Okay? So there you go. The common misconceptions about life insurance. I already told you one. A one-size-fits-all. It's either term or IUL. No, it's not. No, it's not. You want to know what the best insurance policy is? It's the one that pays out at the time of death. That's the best insurance policy for a client. It's the one that pays out at the time of death. Wonderful. So, what does there's that. Another misconception that I didn't know until I got here. You get paid more off of a term product as an agent than you do with a whole life product. Unless you're an awful agent and you're doing what's best for you instead of what's best for the client and pocketing a bunch of money to tell your clients to pump this flipping whole life policy when they have no business doing that because number one, they can't afford it, and number two, they're not in the age bracket and they're perfectly healthy. They could qualify for a much better product, right? Keep that in mind. So that's another misconception. Another misconception when it comes to life insurance. Not just one company paid out life insurance during 9/11. Many companies paid out during 9/11. Many companies paid out during the Oklahoma City bombing. So that's another misconception. So the good news is we can have peace of mind that comes with knowing that your family, your business, and your legacy is properly protected. Okay? Now, keep in mind this, guys. Before we go any further, I love term insurance. I think term insurance is great. I especially love term insurance with living built-in benefit riders, like critical illness, terminal illness, and disability. Great, awesome, fantastic situation there. I love term insurance. But I love term insurance when you talk about investing the difference and actually helping your client do it. Now, if you're in a organization that doesn't allow you to do fixed indexed annuities to at least get your clients started on an invest the difference kind of model, then that upline and that agency is not good for you. Because with a life insurance license, you most certainly can do fixed indexed annuities and fixed income annuities. Okay? You can. The only annuity you cannot offer with just a life insurance is a variable annuity, which you either need a Series 6 or and 63 or a Series 7 or a Series 65. Okay? But you can do the fixed income or the fixed indexed annuities. So, keep that in mind. And if your upline's telling you, no, you can't do that, go around your dadgum upline because they're putting their dadgum thumb on you. Like a guy named Art Williams said, I wanted to build a company within a company so that nobody would put their thumb on you. Well, if your upline's putting their thumb on you, they're not following Art Williams' philosophy. If your home office is putting their thumb on you, they're not following the Art Williams philosophy. Okay? Now, I do know that there is a place for whole life products. If a person doesn't qualify for term, and if a client wants to use that for a tax advantaged growth income stability, right, within their cash value, okay, and have a tax strategy with that, and they're making well into the six figures. I'm talking 300,000 or more. Okay, that's my personal but professional opinion. I've been in this industry for a long time. And so that's kind of what I'm looking at. It guarantees that that policy would stay on force if they're known to be responsible and known to be able to pay the payments and the premiums. Okay? So let's talk about this again. Just like last night, we're going to do a quick little breakdown of these policies and what they're geared for. Okay? So term life insurance is affordable coverage for a specific time. Okay? Ideal for young families and individuals with temporary financial obligations. So we're going to talk about the theory of decreasing responsibility. Welcome to the live, everybody. I'm sorry, I just get on a mode and I just start going and I forget to say hello. Welcome to the live. Thank you so much for joining me. I hope this brings value to you. Yes, that's the purpose of this. This education is to bring value to you. Okay? So we're going to talk about the theory of decreasing responsibility. So in the early years of your life, they're the most expensive years of your life. You have a mortgage, you got kids in the house, you're married, you have a job, you got a ton of debt, right? And you're not getting paid what you're worth, typically speaking. You may be, but you may not be. And so what you got is all this responsibility and a little bit of cash. You're not self-insured. So what do you need to do? Well, you need to look at a term life insurance policy if you can qualify for it. And I would suggest a term life insurance policy with built-in living benefit riders, and then also attached to it, it's going to be a little bit more, but it's well worth it. Attached to it, a waiver of premium. Why? Well, if you get a critical disability, or if you get a disability or critical illness, and you're out of work for a little bit of while, right? If you have that waiver of premium established, then the company will not make you pay the premiums of the life insurance product because they understand you're in a time of financial crisis and need. Okay? So it's a beautiful thing, and the policy won't lapse. Awesome, awesome. And then return of premium, that's number 2, okay? Return of premium. Return of premium means that if you die, your family not only gets your death benefit, but they also get the premiums returned with a little bit of interest with some carriers. That's a beautiful day in the neighborhood, right? That's unbelievable. That's great. And then the third option, if you have kids in the house, get a child benefit rider. You can cover all your kids for maybe $5-10 more a month. It's a steal, guys. So that's a beautiful thing when you're thinking about term life insurance, when you're in the most responsible time of your life. Okay? But as you get older, right, you'll start paying off your mortgage, your debt starts going away, and then you're starting to learn how to invest the difference of what you would pay in a whole life product. Now, investing the difference is important. So if your agent only sold you a term life policy, you need to call them and ask them, hey, talk to me about a fixed indexed annuity. Talk to me about a mutual fund. Talk to me about a Roth IRA, money market account. Talk to me about these things, because I need to understand what I can do to help build my family's legacy, because that's really how you build the foundation. You get the life insurance that'll allow you to invest the difference in a good, incredible way. Okay? So, there you go. As these responsibilities start getting less, you kick your kids out of the house, change the locks, because their goal is to help them make sure they build their own families, go out of the house, and go live their life in the way that God intended them. Because if you train a child in the way they should go, when they get older, they will not depart from it. Okay? It's a biblical principle, and it seems to come on as true. It may not happen as quickly as you want it, but it happens. Okay? So, that's ideal. The cons of a term life insurance policy, it's only good for the term of the policies in force. And then you got to pay extra crazy renewals if you want to keep that policy, right? But the good news is the built-in benefit rider within most term life insurance policies have a conversion rider. So if you didn't have enough time to invest the difference like you wanted to, or if you weren't taught or trained to invest the difference like you were supposed to be, then, and that's not on you. That's not your fault. That's the other person's fault. That's the agent's fault, typically speaking. Because if they're not pushing to help you invest the difference, then they're not doing a great thing for you. So, bottom line is this. Let's think about this, right? So you didn't have the time to do that. You didn't have the knowledge or education to do that. You just got a term policy and it's coming into the end. You can convert that to a permanent policy, and then you can have life insurance up to 120 years with most carriers. Okay? Now, that's an end result. But if you do the theory of decreasing responsibility correctly, then you would have qualified and bought term insurance and started investing what you had left over. And if you didn't have any money left over, that's great. Let's look at a budget sheet. Let's see what other insurances we can help you save money on, such as health insurance and auto and home insurance, renter's insurance, right? We'll help you save money on that. We'll help you save money on legal protection, help you save money on debt, right? And start working that away so that you can invest the difference, okay? And that's the beautiful thing about that. Oh my gosh, my neighbors are playing music and the teenagers playing music down the hall. It's really bad. Keep practicing. Anyway, but the theory of decreasing responsibility is an important tool that you guys need to understand. Okay? So, you've got a lot of your responsibilities have decreased, right? Kids out of the house, debt's paid off, mortgage is paid off. Do you need a lot of life insurance or do you need a lot of money? Well, you need a lot of money at retirement because pretty soon you're going to have a fixed income, right? Let's make sure that that fixed income works to your advantage when you do put it in a fixed index annuity, or you put it into a money market account, and you put it into a Roth IRA, and you put it into whatever it is and whatever it looks like. Okay, guys? What's up, Prit Paul? How you doing? Welcome to the live. So that's the theory of decreasing responsibility when it comes to somebody who would qualify for a term life insurance policy. All right? Now let's go to a whole life policy. Now keep in mind, guys, this is just an overview. Okay? If you want more information or you want to set an appointment or anything like that, you can talk with me. All right? So yeah. Anyway, the role of a whole life policy is lifetime coverage up to at least 120 years at the most with most carriers. Okay? And it has a cash value component, typically tied to a fixed annuity, right? Now, keep in mind it's suitable for those seeking. What's up, Prit Paul? How you doing, man?
Good, man. What are you up to? Glad to see you doing this.
Hey, yeah, buddy. I did one late last night, and I just figured I need to do another one today. So I'm just giving people a little bit education on proper protection, different kind of life insurance, and what they would possibly qualify for with this knowledge and understanding. And we're talking about not just for families, but for business owners and business professionals and businesses. So there you go. So you can help me out a little bit in explaining some of this because you have a little more experience in the whole life realm than I do, seeing as how I was with a term only company for about 16 years and then only been here as an independent insurance broker for 2 years. And so yeah, maybe you can add some value to this live, and that's why I brought you in here. And guys, if you're listening in, follow Prit Paul. He's a genius. He's a master at this stuff. He's unbelievable. He's got a great organization in Texas, unbelievable, and throughout the U.S. So he's great. Wonderful, wonderful guy, wonderful guy. So whole life is lifetime coverage, okay? Lifetime coverage. He had to go. Okay. All right, no problem. No worries. So, anyway, lifetime coverage with cash value component. Indexed annuity isn't an IUL, but a fixed annuity is typically involved and tied to a whole life or a general universal life product. Okay. Thing is, it's suitable for those seeking long-term financial planning and a small little wealth transfer, depending on how much money you put into this. Okay. So, hey, welcome to the live, brother. How you doing? Welcome to the live, James. Welcome. So, again, guys, you'll get tax advantages when you're doing cash value and such. Typically, what we suggest is if you're going to do a whole life product as kind of a savings module for your money and maybe a growth module, guys, it's not for a death benefit. So get that out of your mind. It's not for a death benefit. You got to have a small death benefit. I would say at least $25,000, because $25,000 at least pays for your funeral costs and funeral expenses in most states and provinces. Okay, so keep that in mind. And if you're going to use it as a savings model, you're going to pump that into your savings model and build your cash value up. Okay, keep in mind that your cash value won't start growing until about 3 to 5 years with some policies. Okay, keep that in mind. Okay, you cannot start withdrawing from it until 3 to 5 years from now as well. Okay, and the policies when it comes to whole life are a little more complex than term. Term's just simple, to the point, bam, you're covered, right? Whole life, you got a lot of complexities, a lot of fluctuating premiums depending on how much you want to pump into the cash value, how much you want to put in the death benefit, and so on and so forth. Now, when you're doing when the cash value pays out dividends, right? In cases of a whole life or a universal life, just general universal life or whole life, that's just an overpayment of your insurance, and you can have the choice to reinvest it into your cash value or not. It's all up to you. Okay, yeah, and such. So there you go. When it comes to a universal life is like an annual renewable term policy that's tied to a fixed annuity. Okay, so you're kind of going up here. The difference is with this is that your premiums are continually going up, right? Because it's an annual renewable term, right? So your premiums go up. It's an annual renewable term till 120. Okay, they go up every 2 years, every 3 years, every 5 years. It really just depends on the carrier or the policy that you have, right? So, universal life policy. It combines protection with investment options. Okay, that fixed annuity. The problem is with a fixed annuity, you don't have any downside protection, right? And it's not tied to an index. Okay, it's just a fixed annuity. Okay. Indexed universal life insurance. Okay. Now keep in mind, these whole life products, if you're looking at these whole life products as something that you have to qualify for to get coverage, don't worry about the cash value benefit as much. Worry mostly about the death benefit. Okay. Now, if you're getting into a whole life product for a savings, right, then do at least a $25,000 or $50,000 death benefit, and then pump it with the cash value to have tax advantages and such. Whatever. It depends on the deal. Now, if you're doing the tax advantage growth, right, with a whole life product, in my personal professional opinion, you need to at least be making $250,000 a year, maybe $300,000 a year. Okay, with the inflation and everything like that, that's what you need to do. Now setting that up for index universal life. Ties to cash value growth to a market index offering potential higher returns. It includes downside protection. When you go in, that's where you're going to start, and that's where you'll end up if the market crashes, right? So you got the downside protection. You'll at least have the income of where you started at, okay, like a fixed indexed annuity. It's a beautiful day in the neighborhood. Includes tax advantage growth, okay? My insight of the IUL is that it's a powerful tool for those who can afford them and understand their complexities, okay? Because it's a complex product, all right? They're not a one-size-fits-all, but can be instrumental in advanced financial strategies if you do it right with the right financial professional, okay? Living benefit riders, okay? Access to a death benefits in case terminal illness happens, critical illness, or disability, okay? Chronic illness, disability, whatever, all right? It provides financial support during life changes and challenging times, okay? Additional riders to consider. We've already talked about this when it comes to term. Additional riders to consider. Waiver of premium, okay? Waiver of premium waives the premium if the policy holder becomes disabled and can't work. They can't fund the premiums. They can't fund the death benefit. They can't, if they get the waiver of premium rider, the insurance company will take that and just let the policy ride on and continue on and not cancel and not be eliminated. So it's really, really nice. Okay. Increasing benefit rider allows for your death benefit to increase over time, keeping pace with inflation. That's awesome too. Okay. And those are available as an additional option in your policy that I strongly recommend and strongly consider. Okay. Child rider. If you have children in the house up to age 24, sometime or 23, and sometimes 26, depending on the carrier and depending on the policy, can qualify for the child rider if they're still living in your house. Like, let's say they're a college student, they got no money. Let's say they're going to tech school, learning how to make money, learning how to get in a trade, learning how to be self-employed, but they don't have that money yet. They're still an apprentice, right? Well, you can get them a child rider, and you can do that for as many children as you have, right? And it's probably $5-10 extra for $25,000. That's a beautiful thing. And then when they age out, they're guaranteed insured if they get a policy through the same carrier. That's beautiful. Up to, I want to say if it's $25,000, they can get upwards to $150,000 guaranteed insured, depending on the carrier. That's awesome, right? And could you imagine what they'd be paying in their 20s? Like $8 a month? What? $8 a month? That's crazy. I miss those premiums. I wish I had those premiums when I was younger. Oh well, here I am today, but that's okay. All right. So now we're going to talk about business protection strategies when it comes to life insurance. We talked about the individual. We talked about the families. Now we're talking about the business protection strategies. So welcome to the live, everybody. Thank you for joining us. Business protection strategies, a key person life insurance policy. Much like an individual policy, the difference is the beneficiary is the business, okay? The owner is the business, okay? And why would you want to do that? Well, do you want your business to last beyond you, or do you want your business to die and your legacy to die with you, right? Maybe you have kids, maybe you have friends, maybe you have family that you want to give your business to as a beneficiary. But if you die, then you got, what do you have, right? I mean, you may have a good, thriving business, but if you don't have a good, thriving business yet, and you die before it gets there, it's good to have a key person life insurance policy that your company owns and that your company is a beneficiary to your business. Okay? So it protects the business from financial loss due to the death of a vital employee. You can do a key person policy on not just yourself, but let's say your COO, your CFO, right? You can do a key person policy for that as well. You need to pay for a new one. You need to hire a new one. What better way to do it than to already have the income in place to be able to start paying them the same salary you were paying your other COO or CFO? That's a beautiful day in the neighborhood, guys. Awesome, awesome stuff, okay? So it helps cover costs associated with finding a replacement and maintaining operations. You got to maintain operations. You got to keep going. The loss hurts. It's painful. They may have become a friend of yours, a good friend of yours. They're like family, but still, you got to move forward. You got to get things going, right? Statistics say that a key person insurance can improve a company's credit worthiness and is often required lenders and investors. Okay? Keep that in mind when you're doing key person policies. Okay? Group life insurance. Group life insurance. Now, if a client has group life insurance, like an individual and a family person, if you have group life insurance and you think that's the only thing that's only good enough for you, you don't need a private policy, think again. Group insurance is owned by the company, not the employee. You only get the certificate of insurance, not the policy. Okay? The policy is owned and operated by the company that hired you. So, if you ended up with a disability, the company can decide to not cover you anymore. I've seen it happen before. If you ended up with a terminal illness, like cancer, the company can decide to take you off of their enrollment of the insurance policy. It's their right and privilege as they are the owner. So it's good to have a private product. But let's say you're a business owner and a client needs that extra group life insurance, right? So group life insurance provides employees with, enhanced benefits packages, all right? Contributes to employees, their satisfaction and their retention, okay? And their retention. That's very important if you want to retain employees. If you don't care about your employees, just keep about it and just keep doing your thing and don't spend the extra money on them that you need to do in order to have a good quality business. I'm just being honest and upfront and direct with you. If you don't want a good, thriving business, don't give your employees benefits. Just don't do it. But if you want a good, thriving business and you want to build a legacy in your business, you need to take a little bit more skin in the game and get your employees benefits programs, like a group life insurance policy, a group retirement annuities. It provides employees with retirement income solutions at a conservative or moderate rate. Okay, that's great. That's what most 401ks are anyway. Okay, and 403bs, right? It demonstrates employer commitment to long-term employees' well-being. All right. Employee retention studies say that 78% of employees are more likely to stay with an employer because of their benefits program. 78%. How many of you guys are sick and tired of looking for people to work with you, to work for you? I mean, gosh, ever since the pandemic, has it been a little more difficult to hire somebody these days? Right? Right? Has it been a little bit more difficult to find committed, good, hardworking employees? Well, guys, if you had just a benefits package with them, maybe you'll have a good rate of return on your investment, or a return, or ROI, return on investment, when you're paying out that, because you're going to have good quality employees staying with you and building your business, right? The average annual turnaround rate in the United States of America is about 17%, with certain sectors experiencing rates as high as 60%, 60-40. So 60% of your employees leave, and you're having to maintain that over and over and over again if you don't have any employee benefits. It's time to get with guys like me who can help you really bring that solution to your business and to your platform for your employees. It's very important if you want your business to grow, if you want your business to thrive, even if you want your business to just keep going and maintaining course. Okay? Advanced strategies for high net worth businesses, high net worth business owners, and individuals, high W-2 employees. I'm talking $500,000 earning employees, $400,000 earning employees to $1 million earning employees, right? This is what we're talking about for these strategies, and also business owners and business professionals that are in this high net worth range. The infinite banking concept. Now, I came from a buy term and invest difference portfolio model, not portfolio model. I'm used to that. I love it. I think it brings a lot of value. Now, infinite banking, there is a place for it for the client that wants it. Just like the Kaizen strategy, which is also a really good strategy that we offer in our agency. Okay, we offer these products as well for high net worth individuals, high net worth business individuals, high net worth businesses. Okay, infinite banking utilizes a specially designed whole life insurance policy to create a personal banking system. They talk about the Rockefellers using this. I haven't dove into that and really researched that as much as I could have, but I've been doing a lot of appointments lately. So you gotta find the time to make the time, right? And making money and helping my clients make money for themselves as well, and make money work for them is my dream, my passion. It's one of my pleasures of doing. Okay, so this infinite banking concept utilizes a specially designed whole life policy to create a personal banking system, allows for tax advantage growth, access to capital for business and personal needs. Okay, so it's very important that you understand that. Again, high net worth families, high net worth clients, high net worth employees, high net worth business owners. Okay, infinite banking concept is a powerful strategy for those who can commit to its structure. You have to be committed. If you're not committed, it's not going to work, and it's going to turn out being the scam that most of us used to say when we were in that one company, right? Okay? Because I've replaced a couple of those policies because the client was about to go down because they weren't committed to the product and the system, right? To its structure. And understand its long-term benefits. It's not a short-term product. It's a long-term product. Much like doing the investing in the difference. Going into a managed advisory account, mutual fund, money market, indexed annuities, whatever, right? Same concept. You got to be in it for the long haul, guys. It's not a quick fix, but a disciplined approach to financial freedom. Okay? The Kaizen strategy. Now, we are the few that have the Kaizen strategy, as far as I know, when it comes to insurance brokers and insurance professionals. Okay? We have this. It combines an indexed universal life insurance policy with premium financing. So if you got $100,000 in your cash value, the bank comes in and matches it with the bank loan. This is incredibly important for enables high-income individuals to obtain larger policies with less out-of-pocket expense. It's incredible. I've never seen anything like it until I came here into this independent business model, right? An independent insurance broker, right? Okay. The beautiful thing is it offers substantial death benefits and potential for significant cash value accumulation. All right. It's ideal for business owners, executives, and professionals seeking advanced wealth building in a life insurance product that they want to utilize to eliminate taxes, get around the tax code, and all that stuff. It's pretty incredible product, but you got to be high net worth. If you're not high net worth, nobody should ever, and keep this in mind, if you're thinking about what all these other gurus are saying about whole life insurance, indexed universal life, oh, take your 401k out and put it into indexed universal life. Don't you ever do that. That is a bad financial decision. You keep your 401k, you keep your Roth IRA, you keep those in place. This is just a supplement to add to it if you want to, if you can commit to it as much as your Roth IRA and your 401k, and you can continue to stay in it for the long haul and the long term. Okay? Guys, here's the thing. In order to find out which life insurance you qualify for, which proper protection you need, want, and desire, right? You need to get with us and have your complimentary customizable expert financial analysis, the EFA. Okay? It's complimentary, personalized to you, tailored to you. It assesses your entire financial situation. If you're a business owner, this is a great tool to have for your personal stuff, but you can also include your business stuff as well. And it just builds you an incredible blueprint of where you are financially, where you want to go, and how to get there. It's beautiful, free complimentary analysis. Okay. It identifies the gaps in your coverage, and it also identifies where you guys might have some people manipulating you financially, right? Maybe some insurance professionals coming in and doing more for their pocket rather than your pocket. It happens. It happens a lot. The expert analysis reveals that. Okay? It identifies financial gaps in your coverage, in your protection needs, and in your growth. Okay? It gives you opportunities for better growth in your retirement and legacy planning. Okay? It tailors your life insurance needs and solutions for your business, for your family, and for the individual. Okay? Anybody have any questions or answers? I mean, questions or comments? Questions or comments? Okay. What's up, Brittany? How you doing? Welcome to the live. Welcome, Reba. Okay. Here's a recap. Okay. Summarizing life insurance as a whole. Term life is for people who have who are in their most expensive years of their life, right? They have debt, they have a mortgage, they have kids in the home, they have a job, and they have debt, right? They have all that stuff. Term life insurance is key. If you don't qualify for term, then you're probably looking at a final expense policy just to get your final expense and burial needs taken care of, so your family doesn't have stress about that when you pass on, and they can pay that death benefit up front and not have to worry about remembering your death every single day because the burial company or the funeral services and funeral homes charging interest daily until you get it paid off. It's crazy, but it's true. And not having to worry and scrounge around for a GoFundMe that on average pays a death benefit up to $2,500. GoFundMe is not life insurance. It's not. Don't treat it like it is. It's not. It's not at all life insurance. Okay? Whole life insurance is for people who want a policy for their whole life up to 120 years. It's going to be more expensive, and it's going to be more involved because it has a cash value savings tied to it. Okay, that cash value is not available to you for 3 to 5 years, but once it becomes available to you, it starts growing at a moderate and very low rate, right? If you get a universal life, it grows with your policy because a universal life is an annual renewable term. So your premiums go up every year, and then your cash value can go up because it's tied to a fixed annuity. It's tied to a fixed annuity, but there is no downside protection in a universal life. And these are for clients who want that. I don't necessarily recommend a universal life policy. And if you get a universal life policy, click option B, not option A, because option B allows you to keep your cash value and your death benefit. Option A, you lose one or the other. Okay? Why you would pick option A blows my mind. If your agent tells you to pick option A, question them. Question them about it. Ask them about it. And ask them why they're not giving you a term either. Okay? So, there you go. IUL. An IUL, my personal professional opinion, is for people who have a higher net worth. Okay? IUL is a universal life insurance policy, has flexible premiums, it has flexible death benefit. What does that mean? A flexible premium, so if you flex on the premium, you're going to either lose on the cash value or you're going to lose on the death benefit if you want to decrease your premiums. Okay? If you want to increase your premiums, you can increase your death benefit or you can increase your cash value. It's up to you. But here's the deal. Again, it climbs like an annual renewable term. Okay? So there's that. But the indexed universal life is tied to index. Okay? Indexed annuity, which allows for downside market protection. Okay, so when you get into it, you're not going to fall below it. Okay, even if the market does, you're not going to fall below it. That's like a fixed indexed annuity. It's good for people who are high net worth clients, people who are high W-2 clients, and high business owner clients. I wouldn't say high business owner, but at least a sustainable business owner making $300,000 to $500,000 a year. Okay, high net worth client making $250,000 a year plus. Okay, the infinite banking concept, that's good for business owners, business professionals, and executives. Okay, and also the Kaizen IUL, which is not just an IUL, but it's also a financing model as well to allow you for more income, okay, as a business owner, business professional, or an executive, okay? That's the summary points of all of this, okay? The importance of property protection through life insurance is about as important as what the Bible talks about building your house. You can build your house on the rock or you can build your house on the sand. What's going to happen if you build your house on the sand and you got a beach house but you're not on a rock? Well, if a tsunami comes, a hurricane comes, the waters rise up, your house goes away. It does. But if you build your house on the rock, your house is more stable. It's more secure. You may get part of it blown away, but you got something to build off of. You still have your foundation. And that foundation is life insurance. It's proper protection. Get with a financial professional like myself to do your expert financial analysis. Get with me because I'm committed to you. I'm committed to helping you do the best for your family's needs, your business needs, and your legacy needs. That is my purpose because the Bible talks about this. A good man leaves an inheritance for his children and grandchildren. Well, if a good man leaves an inheritance for his children and grandchildren, and that's what the Bible says, don't you want to be that good person? Whether you're a man or a woman, don't you want to be that person? I know I want to be that person, but not only do I get to be that person for my family and myself, I get to help others do the same. And that's a big deal for me because I was never able to do that before I got into this industry. It's awesome. It's incredible, right? All right. And it's also to teach you that saving your money is not necessarily the right move for you. If you look at the parable of the talents, Jesus said the master basically kicked out the servant that was afraid and stuck his money in the bank, stuck his money in a safe. What does that do? Well, you got inflation. And if you got inflation, your money's not growing, it's dying because you're afraid of the market, or the person is afraid of the market. Just like the servant was afraid of the market, was afraid of this. The master said you could have at least put it in this, a money market, right? Something that was liquid, but instead you didn't do anything with it. You were afraid and scared. Get out of my kingdom, you who do evil. What? What? I don't know. That's what my Bible says. That's what the Bible says. Saving your money is evil if it's based off of fear. Scared money doesn't make money. So what did the master tell that servant? The master told that servant to give his talent, which, by the way, the talents that were given back then in that parable are in today's dollars worth $750,000. One talent. He said, give it to the one who has 10 and get out of my kingdom. Wow. Unbelievable. So I get to teach people how to invest their money. And I get to teach people how to be good with their money, how to be righteous, while I'm learning always how to be better with my money. You don't just learn it and then it's done. You learn new things every single time. Everybody's at a different level. You know, Elon Musk is at a different level, but he still needs to get work and doing, because Solomon in today's dollars would be 7 Elon Musks. Yes, 7 Elon Musks in today's dollars is how much King Solomon was worth. Unbelievable. I did my research on this. So here's the next step, guys. Complete your EFA with me and my team. We will help you. We are committed to you. We are driven to help you. Okay? My contact information, you can direct message me for that. You can contact me. Go on my videos. You'll see a little QR code to get on my calendar, and we can talk with you about that as we move forward and help you build good financial stability. But it all starts with proper protection. It all starts with proper protection. Okay, guys? And don't wait until it's too late. Guys, let's work together, secure your family and your business future. Now is the time, for this is the day of salvation. That's what the Bible says. This is the day of salvation. Why not have it be the day of salvation for your finances, for your financial word picture? Guys, that's all I've got for you today. And thank you for joining the live. I'll see you guys soon. And if you need anything, have any questions, direct message me on here, shoot me a comment, and let's talk.